The Canadian Securities Exchange presents your go-to source for trends in junior and small cap markets. Each month, join host Anna Serin and financial expert Bruce Campbell in partnership with StoneCastle.
Welcome to the final 2025 edition of The Market This Month. I'm Anna Serin with the Canadian Securities Exchange, and as we wrap up the year, it's worth taking a moment to look back. 2025 brought big shifts across markets, renewed optimism in some areas, caution in others, and a reminder that agility, timing, and perspective matter more than ever. We watched dramatic swings in crypto, renewed strength in several commodity groups, and a continued rotation across energy and precious metals. All of it played out against a backdrop of macro uncertainty that kept investors alert. But while sectors moved, the infrastructure supporting Canada's growth markets also evolved. And for CSE issuers and investors, that evolution may prove just as important as the market cycles themselves. One of the year's major milestones for the CSE came when all CSE-listed companies became eligible for trading on the Interactive Brokers global platform. This expands the reach of Canadian small cap and growth issuers to a worldwide audience of active investors, increasing visibility, improving liquidity potential, and opening doors that previously didn't exist. Another transformative development arrived in October when the CSE's acquisition of the National Stock Exchange of Australia, the NSXA, continues to operate locally under its existing leadership, but now with new support behind it, creating opportunities for cross-border listings, shared expertise, and a more connected pathway for early-stage and resource-focused companies across Canada and Australia. And while that infrastructure shifted, issuer activity stayed strong. At the end of October, CSE mining issuers surpassed $1 billion raised in 2025, highlighting continued confidence in the exploration and development cycle. A standout story this year was Blue Lagoon Resources, one of only 9 companies in the past decade to receive a new mine permit in British Columbia. We attended their mine opening earlier this year, and the company's commitment to strong First Nations partnerships will soon be recognized with the National Award from the Prospectors and Developers Association of Canada. You can see a full podcast done on CSE TV with Blue Lagoon Resources. Go check it out. We also welcomed new listings this past month, including Encore Technologies, a next-generation digital infrastructure company, and BitZero Holdings, a clean energy-powered data center operator, backed by none other than a strategic investor, Kevin O'Leary, both joining a growing roster of new technology companies focused in AI and blockchain arena, choosing the CSE. All told, it's been a month and a year of growth, recognition, and momentum for the CSE issuers as we head into the final stretch of 2025. Up next, I will break down what we've seen in the past month with Bruce Campbell with StoneCastle Investment Management. We're going to talk about Bitcoin, gold and silver, and Canadian energy stocks. Later in the show, I'll sit down with Brent Gilchrist of Dean's Knight to look back at the resource sector's performance this year, what worked, what lagged, and where opportunities may still lie as we move into 2026. Whether you're an investor, an issuer, or simply tracking market direction, this episode is designed to help you close out the year with clarity and a sense of what comes next. Let's dive in. Now I'm joined with none other than Bruce Campbell with StoneCastle Investment Management. Thank you for joining me, Bruce.
Yeah, it's great to be here in person.
That's right. The sad part of the winter months is how much darkness that we deal with, but it's normally when you're able to come and join us in person. So it brightens up my month.
Well, it's a little bit like the resource sector. It's like we're living underground in a mine.
That's right. Okay, listen, this has been, we're at the last episode of 2025 for our first year as The Market This Month. We had our show before that for a few years called The Market Recap, but we are completing this year. I think it's been a great show this year. How have you felt?
Yeah, it's been awesome. We've had good feedback and it's been a lot of fun, right?
That's right. We have a lot more viewers. So please stay engaged. And of course, if you have any questions or if you want to hear anything from Bruce, then you just reach out to me and let me know and I'll make sure that we get to it. Okay, we're going to dive into what's happened in the past month as we end off the year, Bruce. We're going to talk about Bitcoin. We're going to start off there. We saw the height of Bitcoin in 2025 was in October. It hit $126,080. It is now, around the time that we're recording this, it's sitting around $92,500, which is, over a 26% drop from its peak. Are we going to see it continue to bottom? And what do you think is going to happen in 2026?
Yeah, it's been so interesting to watch because, there's a lot of talk behind the scenes of what Bitcoin really represents, right? Is it liquidity? Is it risk on asset? Or is it a combination? Is it a safety asset?
Is it a fiat?
Is it a fiat, right? And I mean, there's all these conversations going on, and we saw the markets doing very well, through most of the year.
Yep.
Obviously, we had the sell-off in April with the tariffs, which at that point in time, Bitcoin did hit, a fairly significant low, even lower than where it is now.
Okay.
And then it rallied up as the market was all, kind of risk on. And then in the last month, we saw this bout of, kind of risk off. We saw that through the first part of November with the overall markets, and we saw Bitcoin leading that. It started ahead of that, and it continued on its downward path. It has got very oversold and we also saw, higher lows, both from back in April, but also as it dropped down, it sort of waggled a little long, and then now it's starting to move out as we see this. So it looks like there was a true kind of risk on move, a liquidity move, where money was coming out of the markets and now it's headed back in. And Bitcoin almost looks like it's a bit of a leading indicator.
Yep. Okay. So two things I want to ask you here. The first is, as you're looking at these trends, these are new trends that are being created every year, right? I mean, Bitcoin hasn't been around that long. So how do you manage these trends when you're looking at what would be considered, something that doesn't have a lot of historical data on it?
Well, I mean, that's part of the issue, is trying to figure out where Bitcoin fits into that asset allocation. Is it a currency itself?
Yeah.
Is it a quality asset? Is it a liquidity asset? Is it a risk on asset, right? And I mean, at different times in the cycle, because it has been shorter in history, it's given us different indications of what it is. And this last move, where it went up and topped out almost with the equity markets and then pulled back, it's showing us that maybe it's almost a bit of a leading indicator for risk on assets.
All right. Bitcoin, what are you, is what we want to know. Okay, here's my other question for you. When we talk about, people leaving an asset class or leaving a commodity, they're usually taking that money off the table and putting it into some other asset. Or that might be the reason they're taking it off the table. It might not be that they want to leave Bitcoin, but that they want to enter gold, for example. So do you think that maybe this downward pressure on Bitcoin is really the market or money leaving Bitcoin to enter another asset?
It's hard to tell at this point in time because it's been so quick, and it's probably early on to see. We saw Bitcoin going up. We also saw a lot of the metals and resource area going up, both from the pure metals standpoint, but also from the stock standpoint.
Yep.
And so I wouldn't necessarily say that, left one area to go somewhere else.
Okay.
And it's been such a quick move. We saw, and we're seeing more of this with the markets all the time, is that, we saw that move where it peaked out in October, and by, a week or so ago now, it was hitting its low, and now it started to recover again.
Yeah.
And it's doing it in fairly big jumps, 4, 5, 6% per day.
Okay.
As opposed to, kind of slow and steady, which leads me more to believe that people are jumping in and jumping out. But the trend certainly has been over the last few years that net flow of money into Bitcoin. And I think that probably continues. And if you look at kind of part of the reasons that it was bottoming was that there was, some big US investment banks that are now recommending Bitcoin as a allocation to portfolios in kind of the 1% to 4% range, which we had never seen before.
Yes.
And so that's, a little bit of wind behind Bitcoin's back.
I think there is also something to be said, which I always find interesting when I talk with people that aren't necessarily big investors, but have Bitcoin accounts, how easily they'll show me right on their phone their digital wallet and that they can buy and sell. So I think there's also a different trigger happy investing experience with Bitcoin than there maybe is with stocks. Do you think that there's a difference there?
Certainly there has been. I think even the world of the stocks has unfortunately moved closer to the casino side of things than the investing side of things. And now with digital technology, that's just accentuated that trend where people are, jumping in and jumping out and watching things way more than that used to be in the case in the past. And I think it's also changed the speed at which information moves.
Absolutely. I was just having that conversation the other day with somebody about the fact that they're struggling to identify long-term investors, that the new generation of investor coming to market is kind of a day trader. That is the style of investor that's coming to market. And they sit there and they look at their, it's right available on their phone. And when news comes out or if there's a jump in the market, it's all right there. And they're in and out and in and out. They might come back to the same stock 4 times, but they'll jump in and out, on more than one occasion instead of that long-term play, which is hard. I think it's hard on the junior space, that style of investor, don't you think?
It is. It's also, it could though just be a function of markets, right? I mean, valuation, if you think back to the last time we were at similar type of valuations for the S&P, there was a lot of the same talk. The internet was brand new and people were day trading all over the place.
When the internet was brand new? Did you just say that?
I did, yeah.
Bruce.
That dates me, doesn't it?
I remember when it was brand new.
Yeah, and everyone was trading on their computers. Now the technology is a little bit different. And I mean, that eventually kind of washed out to a certain degree and people went back to longer term investing.
Okay.
I mean, maybe the same trend will happen now.
I like this hopeful message. I like this hopeful message. Okay, speaking of hopeful messages, let's move into gold and silver. I mean, we've had quite a year in both gold and silver. You and I have talked about it at every single episode, I think, this year. And gold in particular has had a fantastic year. So they've held strong. The stocks continue to outperform. What are we seeing now as the year comes to a close?
Yeah, I mean, the big thing that we've started to see is we've seen a catch up in silver in that, gold made its move. And, again, there was lots of theories on, gold and what it was being used for and why the money was going there. And now silver's really started to play catch up and it's had, a really strong last few months. And as a result of that, many of the silver and gold stocks have done phenomenally well this year. It doesn't look, when you look at it from kind of a technical standpoint, it doesn't look like, there's really any damage, anything negative that you can point to. When you look at it from a purchasing power standpoint, it still is, kind of within the range of what you would expect given, what we've seen from inflation in the last few years. And then when you look at it from the standpoint of central banks buying because of reserve currency status with the US and deterioration of purchasing power, that's probably going to continue as well.
Yeah. I'm a big fan of the silver space. And I think the one reason I'm quite intrigued by it, obviously, gold has always been such a great standard for us to follow. But in the exploration space, there's not as many pure silver plays out there. So, and I find that they're a little bit more dedicated specifically to that commodity, and their expertise for the teams that they have are pretty generous. So I do like the silver stuff that we see in the junior space just because it's a little bit of a smaller collection that you can choose from as opposed to just the amount of gold plays that are available. What are your thoughts on silver specifically?
Yeah, I mean, it's, tends to be a byproduct of gold and other type of mining.
Right.
And so when you see the specific silver, focus for a company, that does tend to be a bit of a differentiation for sure. Yeah. And I mean, a lot of those companies have really started to perform here in the last 6 months.
Yeah, it's great. It's wonderful. Okay, let's end off with just chatting about our final kind of hot topic for the day. Let's talk about energy stocks. Now, this has been kind of an interesting phenomenon that we've seen in Canada. You can tell us if it's outside of Canada as well. But, oil prices are down, and we are not seeing that reflective in energy stocks in Canada, right?
Yeah, no, not at all. I mean, we've seen oil pull back probably a little over 20% from its high earlier this year.
Yeah.
And historically, when you've seen that happen, you would have expected oil stocks to have negatively been impacted, but that's actually not been the case.
Yeah.
And several of the oil companies have been doing well. There's been some, significant M&A when we saw, May get taken out. There's also some rumors of other M&A, but then there's, some intermediates that are just, going about their business, doing their thing. They've been really efficient with capital, and they haven't, been too crazy on the spending side.
Yeah.
And shareholders are starting to appreciate that. And I think it's such an under-owned sector that now you're starting to see money come in. But you also have to always question whether or not investors see something in the oil price, and potentially we start to see that move into 2026.
Okay. So keep watching.
Yeah, exactly.
So would you say there's an opportunity there as an investor to take a look at the energy sector?
Yeah, certainly. Like if you look at our own positioning with StoneCastle, we've, over the last several months, we have a higher weighting to energy than we have had in, quite a few years now.
Very cool. And it provides, I think, some support to a local sector that is very valuable to us in Canada, right?
Yeah, I mean, there's a lot of growth that comes out of the energy sector for sure.
Yeah, absolutely. Okay, we are going to be joined by Brent Gilchrist with JDS Mining and Dean's Knight as our special guest this month. We're going to start having special guests going forward. And I think in the studio, we're even going to be able to have you join us the next time we have a guest. But as I go into my interview with Brent, we're going to talk about all things resource sector, what we saw in 2025, what we might see in 2026. What do you want to know as a fund manager? What is something that you want to know from Brent?
I mean, he's got his finger on the pulse of business.
Pulse, that's right.
I mean, from two different directions, as you said, like the JDS side, I mean, they know mining and mining knows them.
Operations, yeah.
And then just from the Dean's Knight side as well. So he'll be a great guest. There's a few things that, would be really interesting to find out on trends. One is, what are they seeing from an M&A perspective, and kind of, who they think might be targets, because that's starting to get heating up now.
Right.
And probably will continue because it's so difficult now to develop and build a mine.
Yep.
So that would be one. The second would be commodities, kind of what other commodities does he think, have opportunities here beyond the precious and base metals?
Yep.
And I mean, probably digging a little bit into the base metals side as well. And then the last thing would be, again, he's got his finger on the pulse, but like, what are, some of the areas maybe geographically, but also from a company standpoint that have, some of the explorers that really haven't been discovered or really have huge upside for 2026.
Awesome. I will make sure that I get that information and include in this segment. Bruce, going into 2026 as an investor, what are your thoughts?
I mean, the big thing is going to be economy, right? There's lots of concern about the economy in the U.S. Is it slowing? Is it accelerating? I mean, a lot of the data that we look at says that the first 6 months of the year are pretty good. We don't have data much further than that, but that's certainly something that we're going to be watching. And then, there's always that sector rotation of what's happening. Gold and silver has been strong. Does it continue to be strong?
Yeah. Okay, great. It is always such a pleasure to have you here in town in Vancouver. I hope that I get to see you lots more in person in 2026. And thank you for a great year and a great show.
Yeah, it's been fantastic.
Thank you, Bruce. I'm joined today by one of my favorite co-hosts, Brent Gilchrist with JDS Mining and Dean's Knight. Thank you for joining me, Brent.
Always a pleasure, Anna.
But let's dive into some of the big things that we saw in 2025.
Well, I think most people who aren't necessarily involved on a day-to-day basis would realize that gold's at an all-time high. It's at a bit of a parabolic move. And we spend very little time figuring out why that happened, or whether it was going to happen or not, or what's going to happen next, to tell you the truth. We don't know what the price of gold is going to be next year. inflation obviously has something to do with it. I don't know
Yes.
how much. I'm not an economist.
Of course.
And I often say, did gold go up a lot or did all the currencies go down, the fiat currencies? And
Right?
that's part of it. And
Yeah.
so, again, although we observe and we have opinions like everybody else, they're not really anything we act on.
Right.
But we own, 5 or 6 incredible gold companies. We know the management teams well, and they've obviously had great years. I think our question is not what's the price of gold going to be, and that will dictate our position or our portfolio. What we're now asking our CEOs is, what are you going to do with the money? And that's going to be the next layer of your success in owning a gold company. Is they're making a lot of money. And the next step is, what are they going to do with that money? Are they going to pay dividends or more dividends? Are they going to buy back shares? Is there going to be M&A activity? And it's probably a combination of all those things, but specifically for different companies, it'll be a different answer. So we're very interested to see what they're going to do with the capital.
Right. Any underperformers in 2025 that you were expecting or not?
Yeah, not expecting. Again, didn't expect gold to go to $4,200. Happy it did. We've been very successful.
You know what? I love this moment for the gold bugs, right? Because they have been calling this for decades.
Yeah, good for them. Yeah, absolutely. And so not like we look at our portfolio and we would tell you on the resource side, and the Canadian equity has a great exposure to resources too, their equity growth. But I think that when we look at the portfolio, and the way it's sort of made up is it's sort of 3 legs to the stool. We own energy, which is oil and gas. Mm-hmm. We own base metals, which read mostly copper, and then precious metals, which mean mostly gold, but we do have some silver. And I think those are really, for us, the staples of life.
Okay.
And that's always going to represent most of the portfolio.
Okay.
And what we're kind of excited about, and we point out that our oil companies are incredibly profitable.
Yeah.
And oil was $58 for a while. I mean, it's bouncing around the mid-60s to 58. And I think 10 years ago, if you asked somebody in our country that our oil companies were going to make a really nice cash flows, pay dividends, buy back shares, pay down debt during $58 oil, I don't think anybody would have believed you.
We just talked about that in the markets this month with Briefs today, that oil prices are not defining how well these stocks are doing right now.
And that comes back to our philosophy that we want to own great businesses and great management teams.
Yeah.
Because it's been a transformation over the last 20 plus years,
Yeah.
Canadian oil business. There was a lot of capital spent in the early 2000s to probably 2010, and we're really reaping the benefits of great investments in Alberta and BC and Saskatchewan, great operators, and I think we're the best. I always say, and I've said this before to you, is that we do 2 things better than anybody in Canada. We produce hockey players and miners. Now I would say I think we're the best oil producers in the world, from environmental standards to profitability, to we have great resource.
Yeah.
So we're super excited about watching our oil companies make money, pay us dividends, and one day, and we don't know when, we're going to have a different price of oil, and those companies we'll be asking them, what are you going to do with the cash?
The other thing I want to ask you about is just your thoughts on some of the M&A activity we saw this year. Juniors, majors, whatever you found interesting.
Yeah, so I think, and I don't know, there's a bit of speculation that we probably haven't seen it yet.
Okay.
Like that, there's a lot of
percolation maybe?
Yeah, I think there's a lot of pent up demand for this. And we see that tech looks like it's going to be merged, or they call it a merger. I would say it's a takeover by Anglo.
What do you think about that?
Well, I think that our biggest mining company was in a little bit of trouble, and I think Anglo's has not had the best time in the last few years, but they're both coming into obviously a high in copper, and they do have some great assets. So the company is probably stronger together. I thought it was very good that Anglo did make a lot of concessions to make sure that Vancouver and Canada was a big part of this country, big part of the company. I think the government's pushed for a little more, and maybe that's a good thing. They probably extracted a little more of that, keep a lot in Canada.
Yeah. advocated for
And
it.
who would want a mining head office in London anyway? Like it should be in Vancouver
should be in
or Toronto. I mean, I favor Vancouver, but so I think we're going to have a lot of people working here in Vancouver and Toronto for that much bigger company.
Okay, let's dive down into exploration. So, is there any activity or trends that you saw as far as, purely on the exploration plays?
Well, the good thing, and when I say the good thing, I mean that exploration is so important to the future businesses. And that's why in Canada we have some very good tax incentives for people to invest the flow through shares in drilling for resource, whether
Yep.
oil and gas or whether metals. So right now, if you have a good idea and a good piece of dirt, the market is open. And the financings are just, they're coming at you like hotcakes,
Yep.
right? So we're going out like hotcakes. So it's a good time.
Yep.
And always remember, exploration is a very risky game.
Yep.
But there can be great rewards. But I think what we have to understand is the rewards are really for the next, level of production, and that's years out.
Yes.
And we talked about permitting. So first of all, you have to drill off a economic deposit of size that somebody's interested in financing and building. Then you have to permit it. There's a lot of steps to go. So we're a long ways out. And I think exploration went through a period where there was not a lot of investment.
No.
Now we're seeing it back, and it's really important for the next 10, 20, and 30 years of production of these metals that we need.
Yeah. I mean, from greenfield all the way to production, there's a lot of opportunities to make money and lose money as an investor.
Yes.
And all of the above, right?
Absolutely. I mean, we do very little exploration, and we would say that at Dean's Knight as investors, we would say that even the what you would see as maybe an exploration company, we already think that the deposit has been reasonably defined. We know we feel like we know there's an economic mine here,
Right.
And it's going to take some time.
Yeah.
And there'll be many twists and turns before that is a mine, but there's a lot of value in, some of these, incredible discoveries and now, developing resource companies.
Okay. Awesome. Brent, it's always so great to chat with you.
Awesome,
And I look forward to
Enjoy.
chatting in 2026.
Great. Thank you.
Thank you.